Aloha everyone, this is Joshua Hayes at BigWaveTrading.com coming to you with the August 26th stock market wrap up. First thing I want to start off with is I want to take notice of what I said yesterday. It's very important to realize that when you get breakouts, take them. For instance, we had a stock today that we just went long 2 days ago move up 15%, but on the very first day it was down 2%. So that means we only have about a 13% gain, obviously. But the thing is that that's not moving down. When I mean move down is I mean you see some real selling or it drops below the open of the day before. If you see that happen, you got to sell. And this chart that just happens to be right up here will just give me a perfect example to use this. Let's say that you ignored the low volume and the lower relative strength, kind of lagging, the money stream lagging a little bit, and you went ahead and you bought this low volume bounce off Juniper. Well, here, even though it's down 0.47%, it's not down because you're basically at where you bought it, hopefully in the morning, around the market. Hopefully you somehow didn't get a 25.35 fill that day. Well, maybe you did because it got up to 25.40, I think so. But let's say that you did, and you get that fill, and that's what it is. Well, you see here, it's still fine. But here, right here, it has now, you do not need to wait for the 50-day moving average. If this was your buy date, it closing here is it. That's it. You're out. I don't care if it's low volume or what. You get out. What happens after that? Boom. This is just kind of a great example, just happened to be right here. As you can see, it's trying to come back again, and let's say that you bought it over the 50-day moving average. There you go. You got to get out of it. No questions asked. Got to go. See you later. No questions can be asked here. So you just got to go. And as you can see, it just keeps going lower. But another thing I want to show you is it's doing this. Look at the relative strength line. Look at the divergence, negative divergence. You got lower lows here on relative strength. I can't draw any lines on telechart. And yet here on price, you've got higher lows. So there is a negative divergent aspect showing up right there that is not good. This is not something you want to see. However, the price, as long as it holds in there, doesn't break below the June lows, you don't have anything horrible yet. But if Juniper starts to roll over a little bit more, you could start seeing some heavy selling. The point is that if the heavy selling starts coming around the 19 and 18 area, and if you waited for the heavy selling, you're going to end up having, instead of a 2% loss, you're going to end up having a 10, 20, 30% loss, possibly if something starts to really crumble. So be careful out there if you go long stocks and they don't start moving up immediately. Get rid of them. But at the same time, as long as the market's moving up, don't be afraid to go long. Now let's look at the New York Stock Exchange. You can see it's kind of stalling right here. But overall, with the lower volume each day, this is actually very positive action. What is not positive is that the NASDAQ continues to show a weakening relative strength line, and even as it's been consolidating, the relative strength line here has hit new lows, and that's just not good to see the index that was leading on the way up now lagging. And it's lagging like the IBD indexes, which I will show in video 2 tonight, which will be made because I do not have a headache. I'm back. Finally, about time. A couple days there, it was pretty rough. So anyway, and like I keep showing you on the NASDAQ, you got the relative strength divergence from the new highs right now, weakening relative strength. And the last index we saw that on, even though it's holding in now, which is good, was the Shanghai SC Composite. Now I want to ask you a question. Would you rather have the negative divergence here warn you, get your sell-off right here, and go ahead and maybe start thinking of selling maybe like right here after 3 days like this? You know, or would you rather go ahead and wait and be like, oh, okay, now we have a problem now we have a problem. So I'm in the camp of listening to divergences and listening to some indicators sometimes. And right now, the markets are showing me what China did. And yes, it can work out and base out, make great new stocks. That's why if the market breaks down, if your stocks keep going up, you don't sell them. So if you have action like in a Juniper, you sell no matter what. But if we have in the NASDAQ and we have a stock going up, like I think EMC was up today. It's another big one I can show. Look at that. That's what you want. This is what you want. So you continue to hold. But if you start pulling back and all your stocks start showing topping signals, which if you don't know what those are, you can either study them in the IBD posts that are all over the internet, and we have some in the old Investors Corners in the forums, or you can go to IBD and read the Investors Corners. I don't even think that, I think they're free. I'm pretty sure they're free on Yahoo and stuff like that. So if you just type it in, you can learn a lot about relative strength divergence. And you even see that here at the EMC. You got more relative strength divergence. You got it in Juniper. You have it in the NASDAQ. You had it in China before it started to go down. So all this thing, including the IBD being showing negative relative strength, And also, don't forget, besides the IBD index is lagging the entire rally, with relative strength lines hitting brand new 52-week lows while it moves up. I also don't have any perfect charts. Now, if we go from March to April, I don't have any perfect charts. Okay, I can see that because of the big bad bottom that we had. Now, if we continue to move on after putting in those lows, and I'm right here and I don't have any perfect charts, this is where I started to go, this rally isn't that great. And then I started to notice major divergence around here with, right, especially in June here, with little tiny stocks. That's why I started to go long all these stocks that are $1, $2, and we've been making money on them, but I can't load up on any of them. Thank God there's tons of them to buy. They're all moving up, all of them. So I'm running my fund like a mutual fund. And now as we go up, it even gets worse. I see more and more and more and more little stocks, and I just don't see any IBD stock strength. And when I do see strength, like in a stock, let's say like AMC, it's got negative divergence. So it's just a little iffy out right there. And another thing I want to show you, since I don't know exactly what the names are, I'm going to have to go into the system. I think it's the all word market indicators. I need to show you something that's, I believe, very important. Percent stocks above the 200-day simple moving average. ORC brought this up. This is very important to show. I want to see really quick. I'm going to go through my charts. By the way, if this goes long, I apologize, everybody. Sorry, everybody. I actually paused it there on accident, so I actually apologize for doing that. That was kind of a scary moment there. So I'm just going to do this. I'm going to have to use candlestick chart. But look at where we're at, and look at what I'm going back to. 91% day. Let's look at some of these other times of toppings. 86% was the high there. 94%. That was in the beginning of 2004 when we topped for that period. Now, like I said, we can continue to meander here, but it's just not going to be great. Look at the other time. It got up to 86% and topped in 1997. And look at here in 2000. This is in 2001. Got up to 70%. But this shows you how bad the divergence was with the market racing up to new highs. The 200-day simple moving average was at 70, while this back here was at 86 and 97. So you can see that there was less stocks. So you got way more stocks here. So you can either look at this one of two ways. We're in the mother of all bubbles that we're about to see coming up. And we're going to hit 95% possibly. I don't need 91%, 87%, 78. What is it right here? So this appears to be 86. I cannot believe that. So we're at our highest points since the top of 2004. So this is kind of an insanity area. But the thing is, look at how fast we've gotten there. This is like the recovery from the 1987 crash, except for it's just way different. But however, being up here, this should make everybody at least a little bit nervous if you're not already. I am. I want to see this one. This is the percent of stocks above the 40-day moving average. I'm on a quarterly. Let's go back to monthly. This is good enough doing this. Look at where it's at. It's at the highs, 87 that you see it. I better go back to yearly actually to then see like the highest it's ever been. So let's go back by each year. Where we're at 92 right now. And let's see if we ever hit 92 at the top in 2003 near the end, but we still had more to go. That's why I'm saying this is not probably the top in the market. There could be more to go, but we're near it. We got to be. We've got all these things telling us we are. And we got 94% back here in 1991, and I just need to go back to that chart because I need to make reference to where we were at there. Back here. So there, no. Oh, yeah, 99 top. That's whenever the New York Stock Exchange would have topped right there before the rolling over. S&P 500, I should say, actually. NASDAQ still had more to go. But all I'm trying to say is be careful out there, everyone. Stay with the trend. Don't be afraid to go long your stocks, but if they don't move up, please cut them. Don't be afraid to cut them. How long has this thing gone? Awesome! Under 10 minutes. Gosh, I got a lot of stuff in under 10 minutes. That's because I didn't do this. I didn't look at the dollar, which is looking good. Gold, looking all right. Still in that pennant that I put it in. Still in there. Let's see how it goes. Silver moving up. Oh my gosh, that'd be kind of... But that would mean inflation on everything, though. Platinum not moving up. I don't know. This rally, as it goes on, it's getting more and more curious. Yes, we may have stocks like Dan that since our long in July is up 231% in a little over a month and a half. Yes, stocks like YMI, have gone up 186% in a month. AIG, Fannie Mae, Freddie Mac. But then you see Bank of America. That looks very constructive, but notice the